For icebreakers, I will ask the following persons to receive the microphone and ask questions. Miss Charity Junior, I don't know whether she's here. If you can just indicate by just putting up your hand. Mr. Jono Waters. Mr. Jono Waters, is he here? Thank you, Jono. Mr. Sagwati, Joseph Sagwati, and Mr. Kalisto Jokonya. If you just indicate where you are seated. Thank you, Ms. Junior, please go ahead.
Thank you very much, Moderator. My question is really directed to the IMF representative. You mentioned a number of things, I think there were 5, where you indicated that Zimbabwe needs to improve on their measures to ensure that the market, I think, understands that there is a more ambitious program. There are a number of other areas that you mentioned. Could you mention just one that if we focused on as a country from the IMF perspective, we could almost have that tipping point in terms of getting multilateral agencies to accept Zimbabwe so that the risk rating can improve for the country? Thank you.
Thank you, Mrs. Chinya. Mr. Waters.
Hello. I'd like to build on the question of transparency that we had from the last speaker. There's been issues over the Kariba expansion. Now, I've got an article here from the Post in Zambia. The day after President Sata launched the scheme, and I understand that our project on the South Bank mirrors the North Bank project, and it says here that they got a loan from the Chinese Exim Bank of 315 million and then another 105 million from the DBSA. So that comes to a total of 440 million, and our project's been quoted at 535. It's just this transparency issue, you know, if we can have an exact breakdown. I know there was something in the Herald yesterday. Secondly, and I'm totally in favor of this project, and I realize that, as Minister Chinamasa told us 2 weeks ago, that we had paid $180 million towards clearing arrears with the Chinese banks, yet we owe 143 million to the IMF, and the IMF representative here today has said if we clear that 143 million, things will improve dramatically. So we can see that there's a will to pay one bill, but not a will to pay the other bill. So that's what I'm asking.
Okay, thank you, Mr. Waters. Mr. Joseph Sagwati, is he here?
Yes.
Thank you, sir.
My question is centered on Thank you. My question is centered on the IMF Staff Monitored Program segment, where they talk of banking sector vulnerabilities or financial sector vulnerabilities. And as has been presented by both the minister and the representative from IMF, there is no indication that there is any funding conundrum that is going to be put in place for purposes of disposal, for banking sector stability and alleviating the liquidity crunch. Is the IMF and the ministry only tying up their efforts around policy prescriptions on certain banks or bank requirements on entire systems? Or this is actually centered on the long-term view of making proper credit lines to be available to the banking sector and thereby stabilizing the economy? And secondly, is it tied up, or it is the advice of the IMF together with the ministry that maybe in the long term we might see a clandestine return of our Zim dollar via the so-called indexed coins that they want to introduce, which to us appears to be an effort where you are trying to put lemons to exchange for oranges.
Thank you very much, Mr. Sagwati, for those anecdotes. Mr. Jokonya Mkoma Kalisto, thank you.
Firstly, I want just to say thank you to the IMF for setting up an office in Zimbabwe. To me, that shows confidence and that you are ready to work with Zimbabwe. You unfortunately need to reciprocate in a manner that shows that you are ready to work with all Zimbabweans. I think what has been demonstrated here today is that we are ready to work with you as IMF. We don't have very serious bottlenecks, except that we have liquidity shortage in this country. And it has been said, how can you fund the private sector directly if you are having, of course, our government, which has not yet paid its dues? Do you have a fund that you can establish that will go straight to the private sector and begin to fund the private sector? I believe the private sector is equally borrowed in other areas, and they are repaying their debts. So we are not as if we are a country that does not honor its obligations. We are paying. And my really question is, can you establish a fund that will be able to fund the private sector directly? Because if you are going to only come after the debt is paid, we'll have no manufacturing industry in this country. I thank you.
Thank you very much for those questions. I will allow Mr. Fanezzi. A lot of the questions are directed to you, sir. So.
That's one. Thank you very much for all these interesting, stimulating questions. Let me start with maybe one on, was more a general question by one of the discussants on fund conditionality. There was a list of items included in fund conditionality. But I would say there is no such a list. How can that conditionality also a bad word? Program is the program of the total. With Zimbabwe. It's not an IMF problem. It's a Zimbabwe problem monitored by the state. So, I'm sorry. So the concept of conditionality imposed is not there. Anyway. And furthermore, the policy are not general. They are particular to each country. Of course, we have some ideas, some areas. I mean, I'm sorry, my apologies.
Close your mouth.
For instance, is this on?
Yes, it is.
Yes, okay.
Just bring it closer to you.
Okay. Yes, there are some kind of subsidies. There are some good, and already Mr. Mungai referred to the fact that we support at times direct schemes to give cash subsidies to the poor when you can do it. But there are other kind of subsidies that we do not support in general. Actually, I don't know well about Zimbabwe. I mean, it's not something new. But I've seen countries where, for instance, liquid gas propane was subsidized, and the government was telling me this is done because we want to help the poor, because kitchen is needed to cook and things like that. It turned out that most of the swimming pools in the country were run with liquid gas propane. I've seen countries where bread used to be so cheap because it was highly subsidized that you could find it on the street thrown away. This is the kind of bad subsidies. I've seen some countries, I work with countries that have organized schemes to give subsidies to women, poor women, directly through mobile transfer, mobile telephone transfers, and that's a good subsidies. And then we support it. So it's not an idea of preconceived position. Any policy, and I think Mr. Chinamasa can attest that proposed by the government, will discuss it, will try to make sense, and will provide advice. That's our approach. Also, on the same vein, I mean, I've heard this story about the need of trade protections and things like that, the importance of state enterprise. Those are, I mean, we have no direct responsibilities there, but still, we believe in free trade. In free trade, it's what has been shown helped economies to move. And given the transformation in the world economy, you are not going back to the 70s when the economy was closed. You are a small economy, you have no alternative to open up. No? China has been referred as an example. You are not China. Let's not. You cannot think that you can't replicate China's model. It would be fantastic. I mean, and the real issue of Zimbabwe is that the economy is not responding. You know, its economic activity is lagging. It's very low. The rest of Africa is experiencing an incredible and fast spur of growth. You should join that. That should be your objective. That you should become part of the emerging Africa. No, that's wrong. Don't think that you are special. That you want. I mean, there is a. I mean, you know, I was in Zimbabwe 24 years ago in my first mission as a fund staff. It was immediate as it was prayer. But I remember talking to the people like you then. They were telling me, we know, we like protection. Because they remember the way in which business was done before. No? And they loved protection. Now the world has changed completely. You cannot think that you are still in the former world. No? Business have to compete. And you need to show how good you are. You have stressed the importance of the human capital. You are in the position to compete together with everybody. That's the right approach. Now, let me go to some other question from the floor. What needs to do, one thing that could change the perception of Zimbabwe? First of all, let me tell you, I do not think there is a magic formula. It has to be a concerted approach and comprehensive approach. But I think one issue that comes always over and over says that how come that you pay so much of your revenues, that use so much of your revenues to pay wages in the public sector? The wage bill at 20% of GDP is plainly unreasonable. Let me be clear. And you need to find a way to rein it down. That's a major thing. And that will have to improve the quality of spending, because we'll give more resources to protect the poor and to produce infrastructures that are needed for the countries. I don't think Zimbabwe can afford such a high wage bill. No, but I think you know that. But that's the first point that comes to mind. There was a question on the banking sector. I'm not sure whether I understand it. I got it clearly. And let's say we are making effort in collaboration with the central bank to restore confidence in the banking sector. It is an important condition for starting to grow again. And this has to be done through clear reforms of the structure, trying to ring-fence the trouble banks and try to clean up the balance sheet of these banks. And my understanding is that the central bank is considering a way to do that and will work with it. Finally, I should make it clear the IMF does not provide support to the private sector. We lend to governments, and in particular to central banks most of the time. So we cannot establish a fund to support private investment. It's not your role. We are not a bank. As Mr. Chinamasa pointed out, there is an institution which is part of the World Bank group, which is called International Financial Corporation, which does that. And I cannot answer for them in any way. And I will not. Okay? I think I've talked too long.
Okay, thank you very much, Mr. Fanezzi. I think the reason why the question came is because what the IMF says, everybody else tends to follow. So what you say about private sector in Zimbabwe and your support for lending programs and so on, and comments there too, does affect how the IFC would respond. We will take another batch of 3 questions. This time, maybe not on my list, because my list is there in case there are no hands that go up. Yes, sir. You got your hand up. I need to touch all the sections of the building, so I'll take one from my left, one from my right there. And yes, sir. Please.
Good morning, fellow Zimbabweans. This question is directed to the IMF, and it's most appropriate that we have an Italian speaking on behalf of the IMF, as Italy in Zimbabwe and Europe have the same problem. We've got debts, so we're all in the same boat. As they say in Africa, we are one. But this question is really directed to the IMF in that we've all indicated that we really need to focus on our comparative advantages in the international trade. So what does the IMF see as Zimbabwe's comparative advantages so that we can focus on that? We know we've got a very good educated workforce, and in fact some years ago I believe that one of the students at the missionary school got the highest A-level results in the world. It's a fantastic achievement considering the environment that that student had to work under. But just to repeat the question to the IMF, what are our comparative advantages in Zimbabwe?
Thank you, sir. Copied. May I request, please, that if you are going to ask a question, you give your name and the institution that you are representing. Thank you.
Okay, my name is Caleb Dengu. I come from CDF Trust. My questions are directed to actually the IMF and the Minister of Finance. They've talked about the 6.9 billion debt